Hello and welcome back to our channel, where we explore the strategies and insights of legendary investors. In today's video, we dive into Carl Icahn's investment strategies. From contrarian approaches to patient holding, embracing risk, and adapting to change, these principles offer insights that can reshape your approach to wealth building. Let's delve into the core of Icahn's strategies and discover how they can help you navigate the dynamic landscape of investing. If you're new here, make sure to hit the subscribe button and turn on notifications so you never miss a video. We're all about providing valuable content to help you improve your financial literacy and achieve your goals. So don't forget to subscribe and let's get started. Principle number 1, contrarian approach. A contrarian approach involves swimming against the tide of popular sentiment, seeking opportunities where others see challenges. Renowned investor Carl Icahn encapsulates this notion.
And you got to buy them when nobody wants them, really. I mean, that's the real secret. You buy things, it sounds very simple, but it's very hard to do. When everybody hates it, you buy them. And then when everybody wants them, you sell it to them.
In the world of investment, following the crowd can lead to missed prospects. Carl Icahn, a master of the contrarian approach, demonstrates this principle through his astute choices. But how does this strategy work? Imagine a scenario where a sector faces downturns, and conventional wisdom suggests avoiding it. This is precisely where contrarianism comes into play. Icahn's strategy questions prevailing beliefs and asks, could there be overlooked opportunities amidst the pessimism? Contrarian investors look for battered stocks in strong companies, spotting potential rebounds. This approach demands courage and conviction, qualities Icahn possesses in abundance. By purchasing when others are selling, and selling when others are buying, contrarians aim to profit from market overreactions. Remember, boldness in the face of adversity can lead to discovering diamonds in the rough. Are you ready to go against the grain and uncover untapped potential in your investment endeavors? Principle number 2, long-term perspective. A long-term perspective in investing involves a patient and enduring approach, focusing on the bigger picture rather than short-term gains. Carl Icahn wisely said,
You look at the companies that we bought over the years, I'm surprised myself about the long-termism that we do. So ACF, I own 31 years. I hate to admit that I have these stocks this long.
Embracing a long-term outlook requires the cultivation of patience and resilience, qualities that mirror Carl Icahn's enduring investment style. Delving into Icahn's holdings, one finds a tapestry of companies held for decades.
31 years, and then I looked at American Railcar Industries, 23 years. Federal Mogul, PSC Metals, 17 years. Federal Mogul, 14 years. Viscase, 14 years. Exo, 14 years. Vector, 13 years. American Casino, 11 years. National Energy, 11 years. West Point, 11. And it goes on and on.
But why does this approach matter? Imagine nurturing a garden. Each seedling requires care, time, and nurturing before it flourishes into a vibrant bloom. Similarly, long-term investors plant seeds in robust companies, nurturing them as they weather storms and adapt to changing landscapes. In the investment realm, impatience can lead to missed opportunities. Often, trends take time to materialize, and innovations require years to reach full fruition. So, how can you embrace this long-term philosophy? Consider shifting your focus from quick wins to enduring growth. Ponder Marx's words and assess not only the present strength, but also the future viability of a company's competitive advantage. By doing so, you embark on a journey of wealth building akin to tending a garden, where the blossoms of prosperity bloom over time. Are you willing to delay immediate gratification for the promise of lasting rewards? Principle number 3, activist investing. Activist investing is a bold and assertive strategy, where investors proactively engage with companies to drive changes they believe will enhance shareholder value. Carl Icahn's declaration, "In life and business, there are 2 cardinal sins. The first is to act precipitously without thought, and the second is to not act at all," underscores the proactive nature of this approach. Picture a chess game, where skilled players anticipate their opponent's moves and strategically position their pieces. Similarly, activist investors strategically acquire stakes in underperforming companies, aiming to influence pivotal decisions and unlock unrealized potential.
That's what we do. And we go in and we clean up a company. There are many companies in the country that are very well run, but many are terribly run. And you don't have corporate democracy.
The question arises, why intervene in a company's affairs? The answer lies in aligning corporate actions with shareholder interests. Imagine holding a piece of a puzzle. By influencing strategic decisions, activist investors work to ensure that the puzzle pieces align harmoniously, creating a completer and more valuable picture. Principle number 4. The true wealth of holding. This concept involves nurturing long-term investments with patience, allowing them to appreciate and generate substantial returns over time. Carl Icahn's words illuminate the profound wisdom behind the art of holding investments over extended periods. Consider a vintage wine aging gracefully, developing depth and character over time.
People want to get returns. I guess you have to be somewhat short-term oriented, but the real money that I made over the years is holding companies for 7, 8, 9 years and keeping them. I look back, we bought casinos.
Similarly, the strategy of holding investments involves patiently nurturing your assets, allowing them to mature and appreciate in value. Now ponder this. In a world of rapid transactions and instant gratification, can the art of holding truly lead to wealth? History provides ample evidence. Famed investor Benjamin Graham asserted, "The stock market is a device for transferring money from the impatient to the patient." But how does one resist the allure of quick profits? The answer lies in recognizing the allure of lasting wealth over momentary gains. While markets may experience turbulence, the value of solid investments often appreciates over time, yielding substantial returns. Principle number 5. Embracing capitalism and risk-taking. It means jumping into the world of money-making with confidence, even if it involves some uncertainty. Carl Icahn, a smart moneymaker, says,
Maybe I'm serving my own purposes, but if you want to make a lot of money, take risks. You know, that's what a capitalistic system is about. But don't get...
This idea suggests that by being brave and taking risks, you can find opportunities to make money in our capitalist society. Yet how does one navigate the delicate balance between risk and reward? The answer lies in strategic risk management. Imagine a tightrope walker. They do daring things, but they plan very carefully to avoid problems. Imagine you're at a fair where you can win prizes by playing games. Some games are harder, but they offer bigger rewards. In a similar way, investing can be like playing these games. You might choose to invest in things that seem a bit risky, but if you do it wisely, you could win big. But how do you play this game of risk and rewards? Just like a smart gamer, you need a plan. Think of a skateboarder doing tricks. They practice a lot and wear protective gear to avoid getting hurt. Similarly, investors plan and protect themselves to minimize losses. Now let's think about how embracing risk can make you richer. When others are scared to try something new, they might miss out on good chances. Just like Carl Icahn took bold steps to make money, you can look for hidden opportunities. Principle number 6. Flexibility and adaptation. It means being ready to change and adjust your plans when things around you shift. Carl Icahn says, "I think the market is kind of schizophrenic, and I think it's really due to the information flow being so quick. This shows that the market can change rapidly, like a person with quick mood swings. To succeed, you need to change your approach too. Imagine you're on a journey, and the road ahead is full of surprises. Sometimes, you might face detours or roadblocks. Being flexible means you're open to taking different paths to reach your destination. So how does this apply to investing? Think of it like this. Imagine you want to buy a toy, but suddenly a new and better toy becomes available. If you're flexible, you'll consider changing your plan to get the better toy. In conclusion, Carl Icahn's investment principles serve as a beacon of knowledge and inspiration. As we reflect on the power of contrarian thinking, the value of long-term vision, the impact of activist engagement, and the virtues of risk-taking and adaptability, we invite you to embark on your own investment journey. Armed with these time-tested principles, you're equipped to navigate the ever-changing landscape of finance and cultivate your path to lasting prosperity.